What's up, and welcome everyone to another episode of Wolfe Street. This is going to be a quick video going over one of the most basic and oldest trading concepts in the book. That's trend trading. Now, the trend is your friend, as you can see on your screen, and we're going to cover why trends are important, what it is that I look for in a trend, and what sort of things that I look for trends to hold up. This video is intended for informational, educational, and entertainment purposes only. It's not to be substituted as financial advice. Please go seek the help of a financial professional if that's what you're looking for, and build a plan that best suits your needs. This is going to be a quick video. I don't want to take up too much of your time, so let's just jump right into it. First things first, the longer that a trend is, the stronger that a trend is. This one's pretty self-explanatory. What you want to do when you're looking for a stock trend, doesn't matter if it's up or down, doesn't matter if it's a stock, doesn't matter if it's a commodity, it could be POGs, it could be anything. You want to try to find a pattern along the way. So you want to try to find a trend that goes from the bottom left to the upper right and creates higher lows and higher highs along the way, or vice versa, so that you get a better understanding of which direction that a stock goes in. Now, the longer that trend holds, the stronger that trend will be. And this is going to be really important when you're trying to figure out whether or not you should stay in a stock after a sell-off of some kind, or whether you should sell into a rally of some kind in a stock, etc. And in this case, I'm just going to start referring to things as stocks because I just think it's the easiest way. But in any asset class, you want to try to figure out where the longest and strongest trend is and kind of go with that flow. Now, for trends that we're looking for, understand that multiple time frames, or trends that hold multiple time frames, are going to be stronger than trends that don't. All this means is when you find trends that are respected on a daily, weekly, monthly, quarterly, yearly, doesn't matter. The more of those increments that a trend holds on, the stronger that trend will be. And this is just simply because that means that multiple types of investors are aligned along the way. Lastly, when a longer term trends, understand that trend is typically broken. And so what you want to do is you want to identify these longer term trends and understand that typically if these longer term trends are broken, they will supersede shorter term trends, and they should be respected almost at any cost. Anytime you have trends that align, anytime that you have trends that are long term and they break, those trends typically will be violent. So you want to make sure that you are respecting these trends, and that you are finding the right trend that aligns on multiple time frames, and that you're not looking for hope rallies, basically. Now, moving along, when a trend breaks, so we just covered a trend breaking. When a trend breaks, generally speaking, they will break violently. So you'll see this in some of the examples that we go over. But when a trend that is a long-term trend breaks, generally that break will be violent. So you want to try to be very cognizant, and you want to really respect that trend break and not be brazen in the face of that. So again, the longer that a trend that is broken, the more time is needed to repair that confidence. So just like violent breakdowns, on the back of violent breakdowns, you're going to need more time to repair that confidence. So if you just think of a trend as a psychological measure, it's just a visual representation of people's psychology for an asset. So the longer that a trend is in place, the stronger that a trend is. And that's just because people are more confident, more people are involved, more different types of people are involved, and they've been rewarded for their patience and for their confidence. And so when that confidence is broken, that's generally what a trend break is. It's a visual representation of a break in confidence that will generally shake people out, and you're going to need to repair that damage over a long period of time. So you're going to need a lot of time to repair that damage. Lastly, you'll know when it's over, and one of the things that you'll know that'll show you and identify to you that you know that a trend is over is, generally speaking, when you have that bounce back after a trend is broken back to that prior trend, you'll start to see sellers. Whereas in the past, when you have rallies, you'll start to see more and more momentum. So in instances like that, these are called ricochets. They're often going to be met with selling pressure. Just think of this as, again, if you have a confidence betrayal, and that is a visual representation of a trend break, when that confidence is restored, generally speaking, people will want to be made whole and they'll want to get out. So all this sounds great. All this sounds nice. So let's just put it to some practice. I'm just going to go over a couple of examples. Hopefully this will be very helpful for you moving forward. So first things first, on your screen, you're going to see Facebook, right? This is a stock, no trends, no lines, nothing. And so I'm just going to throw up a trend. Here's your trend. So from Facebook's lifetime, this is the entire lifetime of the stock. You see Facebook's been in this slow and steady uptrend. And you see on the back of this earnings miss recently, you had a violent break in trend. So I just want to go back and show you before I put in some other lines to give you a little bit of points of reference. This is a trend going back all the way to 2012. It's been respected multiple times. Most recently, it was respected in the COVID sell-off in March of 2020, and then recently it broke down. So now that we have this trend on the screen, let's just go ahead and throw up some lines. You're going to see here is a prior all-time high in Facebook, and here was a gap down support in Facebook. So the reason that I throw these lines up is it just kind of goes over and it just shows you that when this stock broke down on this trend, it also ultimately violated a prior all-time high. And then as you get back into that prior all-time high, you're met with more sellers. And all this is going to be is a visual representation of prior levels of confidence or resistance or support, right? So in this instance, this prior all-time high represented some form of support, or excuse me, some form of resistance. And then once it broke out, it was a form of support here. And then as it made new all-time highs, think of it like this. If I was involved before I got to this level, and let's in this instance here back in 2018, if I was involved in this stock at this level in 2018, and I lived through this sell-off, and I held through this sell-off, and I ultimately saw new highs, if it breaks down at that trauma point, as it gets closer to that trauma point again, I'm probably going to want to be made whole. So that's essentially the logic here. You're just looking for prior trends, you're looking for prior inflection points, and you're thinking of it from a perspective of what would I do if I was a prior investor at this inflection point, right? So I'm just going to keep this moving. We're going to go over Netflix real quick. Netflix, same kind of concept. If I back out, let me just go over to the weekly. You back out on Netflix, you got this entire channel that Netflix kind of lives in. We can take the top part off of this channel just to better illustrate. But ultimately, since 2003, here's your trend. And then since 2013, when Netflix started to kind of really accelerate with hyper growth, you've had this uptrend in blue, right? So as we can see, pretty much any time along the way where it's been at or near this trend, Netflix found support until recently when Netflix breaks down here. So let's just go back to the daily real quick, kind of better illustrate this. And what you'll see is, generally speaking, it broke down and it's been selling off ever since. Now, the important part here is this is a trend that was violated. It was a trend that lasted basically 8 to 9 years. So you have 8 years of confidence bestowed in this blue line uptrend, and that was violated. Now, it's important to know that this is a trend that lasted for 8 to 9 years, but ultimately, if we just zoom out again real quick, what we'll see is, I'm sorry about that. What we'll see is that is a trend. That is one trend. It is not the long-term bottom of the channel trend, and that trend actually is roughly about 50% lower. So essentially what we're doing here is we're trying to line up multiple trends, trying to see, what is my risk to the downside for longer term investors or for a longer term trend, and where am I at relative to that? So in this instance, we broke down a 9-year trend. It's not a pretty sight, and we still have a long ways to go in order to hit that channel support that we've seen a couple times now, most recently into 2013 before it broke out. So ultimately, that's something that we want to keep in the back of our mind, and it's something that just kind of gives you an illustration of how there are multiple time frames to think about these things and multiple trends to consider when outlining this. Lastly, I'm going to go over Amazon because I think this one illustrates it just as perfectly, and this is going to go over some of the concepts. So Amazon, I like this trend as an example. Again, this is a trend that lasted from the 2008 recession lows till today. And the important thing to distinguish here, or to represent here, is this has been a slow and steady grind for Amazon. This trend has been tested a couple of times. It was tested in 2015, then again in the COVID lows. It held all the way through, and it's just now recently starting to roll over. Now, if we zoom in on this on the daily, this again will identify to you that COVID low where it held, and we've rallied. And if you just pay attention here, just look how violent. I know I mentioned in the early part of this video how violent some of these trend breaks are. This will illustrate to you how violent they are. So this trend broke in January of 2019, and it was followed by over a 10% sell-off before they had an earnings report. So in this instance, you've had Amazon break down. And again, if you go back to what we were saying on the prior slides, so in this instance, we were talking about you'll know when it's over when a retest fails, right? So in this instance, Amazon had earnings. They had buyers on the back of that earnings. And if you just take a look at where this rally ran to, it ran right to that prior trend where it failed again. So this is an instance of a broken trend. As soon as people were made whole, they wanted to get out, and now you've got this, chopping, backing, and filling. And who knows, maybe Amazon will consolidate back at this 27.75 level. Maybe it'll sell off again. It's likely the case. It'll sell off again. But ultimately, this 13 years of confidence was broken. As soon as it's broken, any retest of that broken confidence was met with sellers. So again, we talked about earlier in the video, you want to think of these things as confidence and confidence being broken. Here's a visual representation right here with Amazon where confidence breaks. You have aggressive sellers. Anyone that didn't sell into this, first chance they got to be made whole, you had people step in and say, hey, you know what? I lived through this sell-off. I don't like the way things are going. Maybe I should take my profits and book them here. And that's pretty much it for now. Thanks for checking me out. Thanks for watching. Please like, comment, subscribe. If you've got any input, please leave it at the bottom. Want to reach out to me at EveryTimeICash. And as always, please stay safe, stay profitable, and as always, stay locked